A relief rally was seen across global markets, including India, on Monday, May 29, following positive news development in the United States. Domestic benchmark indices, the S&P BSE Sensex and Nifty 50, shut Monday's shop with gains of 0.5% each. The upswing came after the US President Joe Biden and top congressional leaders reached an in-principle deal to raise the debt ceiling in order to protect from a potential default. However, going ahead, will the rally continue?
The in-principle deal on US debt ceiling impasse is a near-term relief for stock markets. Details of the agreement are not available, but the debt limit will be suspended through January 2025. This debt limit extension means the issue will be taken up only after the November 2024 US presidential elections. Coming to the impact on markets, it is important to appreciate the fact that stock markets had not discounted a payment default. Markets had discounted a last-minute deal, and this is what has happened.
That said, experts cautioned that the debt ceiling expansion would propel further federal borrowing, worsening long-term underlying value of US assets. Since 2009, large fiscal deficits drove US public debt or GDP ratio over 120% of what is considered to be prudent at 60%, showed a report by ICICI Securities. Hence, analysts see the huge debt pile-up to erode investors' willingness to hold US dollars, making emerging markets an attractive bet.
In the longer term, US is clearly weakening its position because how long will you keep printing? And going ahead, there is also a question mark on US as a reserve currency. If you're talking of the next 10 years, 10, 15 years. So clearly, we will have investors looking at emerging markets, and among them, India surely would be among the top because of the sort of a growth projections we have. I think we will be the only, among the bright spots, we will be shining the brightest.
That apart, analysts at JP Morgan argued that the raising of ceiling will issue over $1 trillion new treasury bills over the next 7 months, which could suck liquidity from markets. Though the US debt limit deal may bring near-term relief to the markets, higher borrowing can weigh long-term prospects. On May 30, global cues, foreign flows and crude oil prices will continue to steer market trends.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.